Right now, someone is signing for a $100,000 truck because the payment looks manageable. The bank approved it. Their paycheck can cover it. But the math says this truck may require a household income of approximately $252,000 a year. Finance it for 7 years, and the loan payment is around $1,328 a month. Add insurance, fuel, and maintenance, and the true monthly cost rises above $2,100. Over 7 years, almost $197,000 could leave the household. But that still is not the largest number in this video, because choosing this truck instead of one costing half as much could eventually create a difference of more than $530,000 in future wealth. Today, we're going to calculate every number and answer one question: who can actually afford a $100,000 truck in 2026? $100,000 trucks are now real. A six-figure pickup truck once sounded like an extreme example. Today, it barely requires one. The 2026 GMC Sierra 2500 HD Denali Ultimate starts at approximately $96,995 before additional options, taxes, and registration. Add normal purchase costs or select additional equipment, and the final price can move beyond $100,000. And buyers are financing these vehicles during an unusually expensive lending environment. According to Edmunds, during the second quarter of 2026, the average new vehicle payment reached a record $777 a month. The average amount financed reached $44,156. 20.3% of financed new vehicle buyers accepted payments of at least $1,000 a month, and 23.9% financed their vehicles for 84 months or longer. Almost 1 out of every 4 financed buyers committed to at least 7 years of payments. The average new vehicle interest rate was 7%. 7-year loans are becoming popular because they make expensive vehicles look affordable, but they do not reduce the price. They only move more of the price into the future. So let's calculate what happens when someone finances a $100,000 truck, turning $100,000 into a payment. We will use a simple example. Truck price, $100,000. Estimated taxes, registration, and purchase fees, $8,000. Estimated out-the-door price, $108,000. Down payment, $20,000. Amount financed, $88,000. Loan term, 84 months. Interest rate, 7%. Under these assumptions, the loan payment is approximately $1,328. That's the number the buyer sees. That's the number the dealership discusses. And that's the number that makes a $100,000 truck feel possible. But multiply that payment by 84 months. Total loan payments, $111,565. The buyer originally borrowed $88,000. That means approximately $23,565 goes towards interest. Add the original $20,000 down payment, and the truck has already required $131,565. The sticker said $100,000. The financing calculation says more than $131,000, and the truck has not used a single gallon of fuel yet. The payment is not the cost. The loan payment is the easiest number to understand. It's also incomplete. For this example, we'll estimate full coverage insurance at $250 per month. Experian reported a national full coverage average of approximately $244 per month in June 2026. The actual cost would depend on the vehicle, location, coverage, and driver. Now estimate fuel at $350 per month, and maintenance, tires, registration, and a repair reserve at $175 per month. The fuel and maintenance figures are estimates. Actual cost would depend on mileage, fuel economy, local prices, and the specific vehicle. Now add everything together. Loan payment, $1,328. Insurance, $250. Fuel, $350. Maintenance and registration reserve, $175. True estimated monthly cost, $2,103. That equals $25,236 every year. Over 7 years, insurance, fuel, and maintenance add approximately $65,100. Add that to the down payment and loan payments. Total 7-year cash outflow, approximately $196,000. The buyer will still own a truck with resale value at the end, so this doesn't mean the truck becomes worthless, but almost $197,000 still had to leave the household. Nobody walks into a dealership and signs a form that says $196,665. They sign a form that says $1,328 a month. That's the gap between what the truck costs and what it feels like it costs. And that gap is where people quietly lose control of their financial future. Now watch what happens when we change only the loan term. The amount financed remains $88,000. The interest rate remains 7%. Over 7 years, the payment is $1,328 a month. But finance the same amount over 4 years and the payment becomes $2,107 a month. A payment above $2,100 would cause many buyers to walk away immediately. The 7-year loan makes the truck appear almost $800 cheaper every month, but the truck did not become cheaper. The price did not change. The buyer simply agreed to remain in debt for 3 additional years. With the 4-year loan, total interest is approximately $13,149. With the 7-year loan, total interest becomes $23,565. The smaller monthly payment costs approximately $10,416 more in interest. You did not receive a cheaper truck. You purchased more time, and the lender charged more than $10,000 for it. That is why shopping only by monthly payment is dangerous. Almost any expensive vehicle can be made to look affordable when the debt is stretched across enough years. The 5 income past. Now we can answer the title. For this calculation, we will use a conservative benchmark. The complete cost of the truck should remain near or below 10% of gross household income. This is not a universal financial law. It is the affordability standard we are choosing for this example. The estimated total truck cost is $2,103 per month. Now test it against 5 household incomes. At $100,000 a year, monthly gross income is approximately $8,333. The truck consumes 25.2% of gross income. 1 out of every $4 earned before taxes would support one vehicle. At $150,000 a year, the truck consumes 16.8%. At $200,000, it consumes 12.6%. At $250,000, it consumes 10.1%. And at $300,000, it consumes 8.4%. To keep the truck's complete estimated cost at 10% of gross income, the required household income is approximately $252,000 a year. And that is only the mathematical starting point. A household may require more if it also has an expensive mortgage, childcare costs, student loans, credit card debt, another financed vehicle, or inconsistent income. The bank may still approve someone earning much less than $252,000, but the bank is answering a different question. The bank asks, is this person likely to repay us? You need to ask, what will remain after I repay them? One question protects the lender, the other protects your life. The $533,000 difference. Now we reach the number that is not really about the truck. It is about the life the truck quietly replaces. Suppose the buyer still needs a truck but chooses one costing $50,000. Use the same assumptions. Estimated taxes and initial costs, $4,000. Estimated out-the-door price, $54,000. Down payment, $10,000. Amount financed, $44,000. 7-year loan at 7%. Estimated monthly payment, $664. The $100,000 truck payment was $1,328. The difference is $664 every month. The less expensive truck also requires $10,000 less upfront. Now suppose the buyer invests that $10,000 and invests the $664 monthly difference during the 7-year loan. Assume an average annual return of 8%. After 7 years, the investments could be worth approximately $90,800. Now suppose the buyer stops contributing and leaves that money invested for another 23 years. At the same hypothetical 8% average annual return, the account could eventually reach approximately $533,000, more than $500,000, not because the buyer received a promotion, not because they discovered the perfect stock, not because they built a successful side business, because they chose a different truck and allowed time to compound the difference. Investment returns are not guaranteed. This simplified example does not account for taxes, fees, or inflation, and past performance does not guarantee future results. But the lesson does not depend on achieving exactly 8%. Money spent today loses the opportunity to grow tomorrow. That $533,000 could represent retiring several years earlier, helping a child through college, paying off a mortgage, supporting aging parents, surviving a job loss without panic, or having the freedom to leave work that is damaging your health. One decision gives you the more expensive truck today, the other could give you more choices for the rest of your life. The other version of you is still making payments on leather seats. When is the truck actually affordable? A $100,000 truck is not automatically a bad purchase. Some people genuinely need its towing or payload capacity. Some use the truck to produce business income. Some have enough wealth that the purchase does not interfere with any meaningful financial goal. But before calling it affordable, several conditions should probably be true. Household income should likely be at least $250,000 to $300,000 a year. The buyer should have at least $20,000 available for the down payment without taking money from the emergency fund. There should be no high-interest credit card debt. Retirement investing should continue after the purchase, and the household should be able to survive a major home repair, medical expense, or temporary loss of income without borrowing more money. Failing these tests does not necessarily mean the monthly payment is impossible. It means the truck is competing with financial stability. The real question. So who can actually afford a $100,000 truck in 2026? Under our assumptions, the answer is a household earning approximately $250,000 to $300,000 a year, with a strong emergency fund, limited other debt, and enough remaining income to continue investing. For everyone else, an 84-month loan may make the payment appear manageable, but it does not change the underlying math. The $100,000 truck became a $1,328 monthly loan, a $2,103 true monthly expense, an almost $197,000 in 7-year cash outflow, and potentially more than $530,000 in lost future wealth compared to purchasing a $50,000 truck and investing the difference. So stop asking only, "Can I make this payment next month?" Ask, "What will saying yes to this truck stop me from saying yes to later?" Because the true cost is not only the money that leaves your account, it is the home you delayed, the emergency you were not prepared for, the job you could not leave, and the future version of you who might have had more than $500,000 but instead spent 7 years making payments on leather seats. The most expensive number on a truck is rarely printed on the window. It is the number you never calculated. What is the highest price you would personally pay for a truck? Share your number in the comments and subscribe to Math Invests. We do the math before the payment does the damage.